Hello everyone, welcome to this insurance education channel. My name is Raymond Macmillan, and as I alluded to in my last video, in this video we'll be talking about life insurance. It's sometimes called long-term insurance because someone can literally buy a policy for the whole of their life. From age 18 you start to work, you can take out a policy to cover you up till you retire or up till you die. Whole of life. You can also take out what is called an endowment policy, which the cover is basically more structured to a savings, but you have a life cover element to it. And the third type you have is what is called a term policy. And the term policy is usually the cheapest type of policy. And let's say you take out a mortgage, you can take out a term policy for the term of the mortgage. Therefore, as your indebtedness to the financial institution reduces, so does the cover in the term policy and the premium as well. There are benefits also to having a whole of life policy, in that usually after 2 years, it starts building up what we call cash surrender value, and that after a while can become a significant sum if you have been saving for some time, and you can use it as collateral to acquire other items. What I like about the whole of life policy as well is the premium you pay at the beginning is a little more than you should pay. It's called a level term premium. Therefore, at an older age, your premium doesn't escalate, and that's why you can pay that same amount of premium throughout the entire period of your life policy. Another benefit is you are only underwritten once, and that's at the inception of the policy. You would do a medical and you'd answer some questions in the proposal form. So if your health situation changes in the future, you wouldn't be penalized by added premiums because you have already been underwritten once, and that's all. If we could shift a little to the endowment, with the endowment policy, it's catered and ideally suited for someone who is a younger person and thinking about university or their own business. They can set out to take out what is called an endowment policy, which provides an element of life cover but a greater element of savings there. Again, it doesn't start accruing immediately, but over time, and different companies have different periods when the cash surrender value kicks in. So do pay attention to the company you're with, and maybe you can compare it with another insurer to see how their rates compare. With the term policy, it's the cheapest policy, and it's ideally suited for someone, let's say a man in his 30s and he has a family and a lot of expenses. That cheaper policy can give him an element of cover, life cover, should in case there's an unfortunate demise in his health or his death, that his family can continue to enjoy the same level, the same standard of living, and the financial institution does not have to tell them, come out of the house so we can sell it to pay the debt. The family can continue that same standard of living they were entitled to when the breadwinner or the contributor to the finances of the family was alive. There are other variations. I know now you can have what is called a critical illness policy. We found out that you may be paying your whole of life policy very well, but what happens if you should be diagnosed with a critical illness? Let's take cancer, for instance. Well, what's going to happen? Your expenses are going to triple or even quadruple depending on what type of cancer you have. By having the critical illness policy can now step in and help you if they need to fly you overseas, etc., to cover all those unexpected expenses. Very good cover to consider. Now, some people cannot depend on their employer for a pension provision. There are some policies which can give you an annuity, and you can start paying now for that annuity, paying into that annuity with access to it at a certain level during your period if a situation should arise where you need some cash. There are many variations to even what I'm telling you now. As life continues, there insurers have to become creative in providing policies to meet the needs of the insuring public. Those are the key ones you would find, and I hope that at least one person can benefit from this information. If you like what you've just heard, why not click the like button below? And may we invite you to subscribe to our channel. If you'd like to be the first to receive my next video, why not click the notification bell above? Thank you for your time, ladies and gentlemen.